You open the laptop on a cold evening, and the numbers glare back like headlights. Tabs everywhere, invoices hiding under emails, and a mysterious charge with the comic book name Digital Services Tax chewing at the edge of your payouts. It's year-end, which means it's time to stop guessing and start closing. Not with a 10-hour marathon that eats your weekend, but with a clear, human script you can actually follow. By the time you shut the lid, you'll know what you made, what you spent, what you owe, and what stories your books are telling about next year. We'll keep it friendly. We'll keep it fast. Start by making one quiet promise. You will gather truth, not perfection. Truth is the official statements, the paid invoices, the bank feed, the receipts that show what, when, and how you paid. Perfection is the fantasy folder that nobody has. Year-end doesn't require a fantasy. It requires facts in one place so the picture stops wobbling. You open a fresh folder named for the year, and inside it you create 3 simple nests: income, expenses, and taxes. That's your set. If the rest of this feels like choreography, good. We're about to dance through it in steps anyone can learn. The first step is the income sweep. Every platform that pays you has an official monthly or annual statement. Ad platforms, app stores, marketplaces, Patreon-style portals, client billing systems. Each of them knows exactly what they paid and when. Fetch those statements. Save them as PDFs or CSVs and drop them into the income nest. If clients paid you directly, download the paid invoices themselves, not just screenshots of bank deposits. A bank deposit shows that money arrived. A paid invoice shows why it arrived. Year-end belongs to Wise. Now open your bank for the year and scroll through the deposits. Match statement to cash. If a deposit is smaller than the platform promised, pause for 30 seconds and read the fine print. Sometimes the gap is a fee. Sometimes it's the little gremlin called a digital services tax, where a country skims a toll tied to its users. And sometimes it's withholding because a form expired. If you're a non-US creator with US viewers, this is where the W8BEN or W8BEN-E earns its keep. When those forms lapse, withholding jumps, and suddenly your margin looks like it skipped breakfast. Every time you explain a difference with one sentence in a notes file, you diffuse a future audit question before it's asked. Expenses are the mirror. Open your card statements and bank outflows and fetch the documents that prove each business cost. Subscriptions live inside vendor portals. Pull the invoices that show the date, the product, the total, and the taxes. Contractors who build you, domestic or foreign, should have invoices that match what you paid. Gear purchases should have receipts with serial numbers and payment method. Rename each file like a friendly librarian. Date, vendor, item, amount. You don't have to be a poet. You just need to help your future self find things without caffeine. If you collect sales tax, VAT, or GST, care about the vendor's tax number being on that receipt so you can claim your credit. If you don't collect those taxes, still care, because complete documents turn questions into approvals. When we total this pile against your bank, the story should stop wobbling. If it still wobbles, we chase exactly one mystery at a time until the wobble becomes a shrug you can explain. Now that you've matched cash to paper, you write the 3 numbers that matter most to a year-end human: total revenue from statements, total expenses from receipts, and the change in your cash between the first and last day of the year. Revenue minus expenses should roughly equal the cash change after you account for owner draws, payroll, taxes you swept into a separate account, and any financing you took or repaid. It won't be perfect. It doesn't have to be. You are looking for makes sense, not museum grade. When you can narrate in 2 sentences why the cash moved the way it did, you've already beaten half the audit triggers creators and agencies trip over. Taxes are next, and this is where we stop fear in its tracks. If your country makes you collect sales tax, VAT, or GST, ring-fence it now. Move the collected amount into a separate account and treat it like lava. Interesting to look at, never to be touched. If you filed throughout the year, confirm that your totals match the returns. If you didn't, reconcile now so you file on time. For income tax, sweep a simple percentage of profit into a do not spend taxes account. If you've been doing that monthly, you're already breathing easier. If you haven't, do a cautious sweep now based on your profit and whatever estimates or prior filings suggest. Over-reserving is a cushion. Under-reserving is a stomachache that writes emails at 3 in the morning. For creators outside the United States receiving US source income, find any statements showing U.S. withholding and park them in a folder called Foreign Tax Credits. Those credits are the quiet superheroes that keep you from paying tax twice on the same money. For U.S. folks, make sure your forms that report to contractors are ready to go. For non-U.S. payees, that may mean keeping copies of their W-8s so you can show why you did or didn't withhold. The moment you see a tax bucket with real money in it, next April stops being a dragon and starts being a chore. Payroll and contractors deserve their own chapter because they make auditors lean forward. If you run payroll, confirm that every pay run reconciles to what left the bank and that the withholdings were actually remitted on time. Payroll audits move faster than income tax audits, and they do not enjoy excuses. If you paid contractors, year-end is when you make sure you have addresses, tax IDs where required, and the right classification. Employees get wages and payroll tax. Contractors send invoices and carry their own tax burden. Blur that line, and someone will hand you a correction you don't want. International contractors add spice. Some countries expect you to withhold when services are performed in your country, and some platforms do that for you. If there's a withholding line on a payment you sent, note it. If there isn't, make sure you weren't supposed to. Let's step into the international maze for a minute and hang signs so you don't get lost. People love the idea that staying under a magic day count makes them invisible. It doesn't. Residency depends on more than days. Countries want to know where your real life is, where you have a home available, where your family sleeps, where your business is managed, where you usually live, where your heart and wallet point. If two countries both say you're resident, treaties break the tie by walking down a ladder. Permanent home, center of vital interests, habitual abode, nationality. And if that doesn't solve it, the two countries talk to each other. For employment income, there's a separate test that uses a familiar day count, but it only applies if your employer isn't local and your pay isn't borne by a local branch. Freelancers and agency owners face a different question. Did you create a permanent establishment? A real footprint like an office, a long project, or an agent who closes deals? If you did, days don't save you. Presence does the talking. Year-end is the time to write one paragraph that says where you actually lived and worked this year, where your company is genuinely managed, and whether any projects crossed lines that create a local footprint. Write it once, in human language. Future you will thank you when a tax office asks much later, and you can answer without guessing. Crypto deserves its own flashlight because it loves to hide in the dark. If you staked and received rewards, many systems treat those as income when you gain control, not when you sell. If you claimed airdrops you could use right away, many systems treat those as income at receipt and then ask you to compute a capital result later when you dispose. Some places have twists where certain unsolicited drops can be treated as zero at receipt in private asset scenarios and taxed only on disposal if sold within a year. But those depend on facts that must be recorded, not remembered. Year-end is when you pull wallet timelines for the year, capture fair value snapshots at the time of each income event, and decide whether your records are good enough to sleep at night. If they aren't, fix them now, while the trail is still warm. And when a government asks on your personal return whether you've dealt with digital assets, answer truthfully. The era of, maybe they won't notice, is over. And your spreadsheet is not a cloaking device. Now, bring in the budgeting lever that makes next year calmer from day one. Pick a simple percentage of profit to sweep for tax every time money lands. Some creators use a third as a starter, then adjust after their next filing based on their actual rate. Some agencies run a tiered approach, sweeping a higher percentage during fat months and a lower one during lean months. But the habit matters more than the formula. Year-end is the perfect moment to look at the year's effective rate, tax paid divided by profit, and set next year's sweep so you're always ahead. If your country expects quarterly estimates, put those dates on a real calendar with reminders before and on the day. It is easier to click transfer 4 times a year than to manufacture courage once in April. With the heavy lifting done, we turn to a few surgical choices you can still make before the year flips. If you're considering equipment or software that you truly need, buying before year-end may put the deduction in this year rather than next, depending on your rules. If you're on the cusp of crossing a sales tax threshold in a new region, staggering a launch by a week may save you a registration scramble. If you issue invoices near the end of the year, being clear about delivery dates can affect which period the revenue lands in. None of this is about gaming the system. It's about choosing the timing that matches the work and keeps your paperwork tidy. A clean choice today is 15 minutes saved every month for the next 12. Agencies, you get a special aside on revenue recognition and work in progress. If you take deposits for projects that stretch across months, your bank balance can look strong, while your profit is thin because the work isn't done yet. Year-end is the time to reconcile unearned revenue, money paid for work you'll do next year, so you don't mix apples with future apples. Likewise, if your team has done work that hasn't been billed yet, list it plainly so the new year opens with invoices that reflect reality. Your clients will respect you more for clear statements than for heroic surprises. And if you pay media on behalf of clients, make sure you've separated your fee from their spend. Commingling those lines is the fastest way to turn a simple close into a detective novel. Creators who work through companies, this is your mirror scene. The company does a clean year-end close exactly as you just did. Then you, personally, do a tiny echo close for your salary or distributions. If you run a board, even a one-person board, document the key decisions, where the company is managed, what major contracts were approved, when the big strategic calls were made. These minutes aren't museum artifacts. They are your proof that the company is run where you say it is, which matters for corporate residency and for those treaty conversations you never want to have, but are very glad you can win. Let's talk audit-proof receipts for a moment, because this is where nervousness evaporates. A good receipt tells a short story. What you bought, who you paid, when it happened, how much you paid, that you actually paid it, and how tax was treated. A bank line that says software is not a receipt. An email that says thanks is not a receipt. The invoice or statement that shows the details is your friend. When you can tie that document to a bank or card line that matches the amount, an auditor's shoulders drop. If the amounts differ because of currency, make a note. If there's a tiny fee that explains the gap, save that line from your processor. Year-end is the moment to fix messy vendors. Download all the receipts that lived in your inbox, rename them gently, and park them in the year folder. It removes questions before they are asked. There's a softer chapter we need to honor. The year-end letter to yourself. It isn't a diary. It's a one-page memo in plain language that says what worked, what bled, and what you're changing. Maybe one client produced joy and profit and deserves more of your calendar. Maybe one service swallowed time and delivered headaches and needs a price change or a goodbye. Maybe travel created tax shadows you didn't expect, and you're going to cluster meetings differently next year. This memo is not for a tax office. It's for the only CFO who never quits. Future you. Tape it to the inside of your digital year folder. Now you stitch all of this into a final pass. You open the income nest and scan for months that look thin. If a month is missing a platform statement, fetch it now. You open the expenses nest and look for the usual big suspects. Software, contractors, media spend, travel, gear, and confirm nothing obvious is missing. You open the taxes nest and check that your sales tax or VAT filings match what you collected, and that your income tax sweeps are sitting in the bucket you promised not to spend. You look at your bank balance on the first and last day of the year, and you read your own two-sentence story out loud. If it still makes sense, you copy the whole folder to your cloud vault, and you're done. If there's a small knot you couldn't untie, you write one sentence that names it, and you leave it. Consistency beats heroics, always. Before we close the lid, let's plant 3 seeds for the new year, so this dance gets even easier. First, adopt the 45-minute monthly close. Gather, match, move. Gather the statements and receipts. Match the inflows and outflows with a note for every oddball. Move the taxes into their lava bucket and sweep your percentage. Forecast 1 page ahead, archive, done. Second, capture receipts at the moment of purchase. When you pay, download the invoice and drop it into an inbox receipts folder. When month end comes, it takes seconds to sort. Third, answer the international questions once per quarter in a plain language paragraph. Where you lived, where you worked, where the company is run, whether any project created a local footprint. Copy and paste that paragraph into your year-end notes and watch your confidence climb. If you've read this far, exhale. You did the heavy lifting with your eyes, and now your hands can do the rest in one sitting. Year-end isn't a monster. It's a mirror. When you gather truth and speak it simply, the fear leaks out and the plan steps in. You know what you made. You know what you spent. You know what you owe. You know which habits kept you sane and which ones need a kind goodbye. And you know, perhaps for the first time, that the numbers on the screen are not a judgment. They're a map. You can follow a map. You just did. Close the laptop. Put a note on your calendar for the first week of next month that says, 45 minutes, monthly close. When it pops up, you'll sit down with a mug, open your 3 nests, and start the timer. The room will be quiet. The numbers will be tamer. And the only drama will be whether you celebrate with tea or a dance in the kitchen. That is a year-end done right. That is a business that breathes, and that, more than any clever spreadsheet, is how creators and agencies stay brave, compliant, and very much in control.